Today, crypto prices plunge after the latest read on record inflation. A federal judge freezes 3AC's assets. And why would businesses want to settle payments in crypto? We asked Checkout.com's Jess Houlgrave. Welcome to CNBC's Crypto World. I'm Kate Rooney. Digital asset prices are falling after new inflation data shows prices rose 9.1% in June. That was higher than Wall Street expected. By noon Eastern, Bitcoin traded around $19,000. Ether, meanwhile, was around $1,000, and Avalanche traded around $17. Okay, let's talk about the top stories. First, Vermont is joining a growing list of states investigating Celsius. Vermont's Department of Financial Regulation says Celsius is, quote, deeply insolvent, and the crypto lending platform doesn't have the assets to pay back its debts. It's the sixth state to launch an investigation into that business. Meanwhile, just yesterday, Celsius paid back a $26 million loan on the DeFi lending protocol, Aave. Next, a federal judge in New York just froze the remaining assets of Three Arrows Capital. The crypto hedge fund managed around $10 billion in assets just a few months ago, but now its co-founders are in hiding and the business is being liquidated. The judge ruled that the advisory firm managing the liquidation had the right to subpoena the two co-founders, Su Zhu and Kyle Davies. Finally, football season kicks off in September and the NFL is rolling out commemorative NFT tickets. The league will offer fans commemorative NFTs for more than 100 games throughout the 2022 season. The NFL first tested NFT tickets last season when it handed out over 500,000 virtual commemorative tickets during certain games. Despite the crypto winter hitting prices and consumer sentiment, businesses are still looking to adopt crypto payments. One study from Skynova found that 32% of small businesses accept crypto. Another 25% said they don't accept crypto yet, but they want to. Major corporations are getting involved as well, from meme stock darling AMC to payments giant PayPal. For our main story, Crypto World's Mackenzie Sigalos spoke to Jess Houlgrave, head of crypto at Checkout.com. Last month, that company announced it would allow businesses to settle payments 24/7 with USDC stablecoins. Mackenzie asked why Checkout.com chose USDC and why businesses would want to embrace crypto payments.
So Checkout.com recently jumped into crypto payments and you chose to use USDC. And I'm wondering if we could just start with why are you now accepting crypto and why did you choose USDC as your stablecoin of choice?
You're right. We recently released our first kind of crypto native product, which is our stablecoin settlement product. And what that allows us to do is to settle our merchants using a stablecoin when historically we would have to settle them via bank transfer. One of the reasons that we did it is so that we can suddenly escape the 9 to 5 kind of weekday constraints of the banking system. This means that we can settle our merchants 24/7, 365, including on holidays, which is really important for their growth and liquidity. And the reason that we started with USDC is, number one, as a stable coin, it means that we aren't exposing our merchants to the volatility that they might see with other cryptocurrencies. Number two, we know that there's a big liquidity sort of depth for USDC. It means that our merchants, our crypto merchants specifically who want this product, are able to then use that in their ongoing operations and to fund further growth.
And so recently we saw the implosion of that UST stablecoin project. There was a knock-on effect to Tether where that briefly lost its dollar peg. Are you at all worried about USDC, or do you feel that there are characteristics of that stablecoin that make it more immune to that kind of volatility?
So we're not really worried about USDC. Number one, we chose that one specifically because that was where we saw most of the demand from our merchants. It's obviously an asset that they feel comfortable transacting in. Number two, I think the nature of USDC, which means it's fully collateralized, fiat-backed stablecoin, is really important. And I do think it's really important when we use the term stablecoin that we're really clear about what kind of stablecoin we mean and whether it is something that is sort of fully backed, fiat collateralized, or one of these newer algorithmic stablecoins, which as we've seen is sort of yet to be proven as a model that can hold their peg.
So you mentioned the fact that merchants were the ones who wanted to accept USDC as a form of payment. What does demand look like so far?
So most of our demand on the stablecoin settlement product, and to be clear, this is not about yet accepting stablecoins from consumers as a form of payment. This is a B2B transaction from checkout to our merchants, to the people that we process payments for. And most of the demand today has been from our crypto merchants. Today we process for about 12 of the top 15 crypto exchanges, as well as a lot of the on and off ramps and marketplaces. And for those merchants in particular, liquidity is really, really important, and getting their sort of acquired funds quickly is really instrumental to their growth. And so we've seen a lot of interest from that merchant group in taking up on this product. When we launched the product at the beginning of June, we had processed about $300 million of payments processed with stablecoin so far. Since then, we've seen that grow a huge amount over the last month as we've added new merchants into the program and ramped up volumes with some of those existing merchants. So it's really proving out to be a great tool for our merchants to access their liquidity.
Do you anticipate expanding the program such that the merchants using the platform are able to accept USDC or other cryptocurrencies from consumers directly?
We certainly think that this is a really kind of popular trend. At the beginning of this year, we did a big survey of about 30,000 consumers, 3,000 merchants. On both sides, we found that there was a lot of appetite for accepting crypto as a form of payment, and on the consumer side, obviously, for actually paying with cryptocurrency, both in terms of sort of traditional cryptocurrencies like Bitcoin, but also stable coins. So we see that there is a real big market for this. There are some challenges. There's challenges around how businesses account for this, how they govern, how they sort of hold these assets on their balance sheets. Those are all things that we're working through very actively with some of our merchants to hopefully be able to unlock this in the future.
Now, you mentioned that one of the incentives for merchants to accept crypto is the fact that it's an instantaneous settlement that can happen 24/7. But I'm struggling to find, like, what are the other perks? I mean, why do businesses really want to accept in crypto? Or is that it? Is that crucial, that 24/7 ability to transact?
So for some of our merchants, that 24/7 nature is really important, and we've seen that. And I think today our stablecoin product is really testament to the fact that access to that liquidity is really instrumental, particularly if you're fast growing and you're relying on your balance sheet and your own working capital to fund some of that liquidity today. About kind of crypto acceptance, I think what we're seeing is that opening that up as a possibility for your customers to accept, to sort of pay with cryptocurrency, also has the possibility to open you up to a new consumer base. There was a recent survey, not done by us, but by somebody else, that said of the merchants that accept cryptocurrency today, about 82% of them say that it's brought new customers to them. And I think what we're seeing here is the ability for brands and consumer brands to attract customers from overseas, people who might otherwise find it difficult to transact with them, and indeed a consumer base that perhaps has made some wealth in cryptocurrency and is now looking for ways to spend it. Tapping into that new generation, proving that you're kind of forward thinking as an organization, has implications and ripples from your kind of overall brand perspective too.
Okay, with that, you're all caught up for today, but Crypto World will be back again tomorrow with a lot more. We'll see you then.